Hello, welcome to this webinar overview of the Personal Property Securities Register due diligence system, which is available as a standalone product, or you can subscribe to it as part of the gold or silver packages within ESS BIZTOOLS. Personal property security is an enormous issue for businesses in Australia, both large and small. So I think it's worthwhile spending a few moments on looking at what is personal property. It's all forms of property other than real estate. It includes a vast range of business property. Many people argue that the name's incorrect, and I won't disagree with that, but that's what the Parliament called it, personal property. But it is, in reality, all business property other than real estate. So what is needed for an effective system to protect your business from potential problems? This is the way I think you as an accountant should be thinking when you're talking to your clients. What is needed to protect your clients? Well, they're going to need a terms of trade agreement, which must be drafted by a solicitor. Some of them will need more than one terms of trade agreement because they'll have different types of selling or different markets that they're selling for within their business. The next area is the retention of title agreement. This is very important, and it also should be drafted by a solicitor. The next area is the internal system. What happens when the client gets back to their business premises armed with the terms of trade agreement and the retention of title agreement? What do they do now? Unfortunately, many of them do not know. There's been instances where staff have got the terminology of grantor and grantee back to front, which resulted in a business losing over $400,000 because their registration wasn't correct on the PPSR. And unfortunately, that particular business had a customer that went into liquidation. Our argument is that the only appropriate organisation to guide clients on the implementation of an internal system as to how they handle the documents internally, that they get the signed document back from the new customer promptly, that they prepare the documentation needed to be lodged on the PPSR very quickly. The lodgement periods are some documents within 15 days and other documents within 20 days of certain events. And if you don't do that, you will not get an effective registration. I've talked to a lot of legal firms all over Australia, and not one legal practitioner has told me that they handle this type of work. They have all answered that their role is to prepare the terms of trade agreement, retention of title agreement, and supply an answer to any ongoing questions that the client might have, not to set up a system. Solicitors aren't really geared for this. It's accountants' work you're used to doing with the internal systems within a client organisation. Our suggestion is that you should be conducting at least an annual review of how the PPSR system's working internally. And if there's been a major change, someone's left, someone's gone on extended leave, there should be some training programs implemented for the person who's taken over that job, because this can be very, very important for a business. A business can lose a lot of money. I don't think any of us want to be in a position where a client has just walked into your office and said, last night we had $300,000 worth of stock stored at Bill Blow's warehouse down the road. And you might respond, yes, that's nice to know. But do you know that last night a liquidator got appointed to Joe Blow's business, and a liquidator has now told us that he's seizing That's $350,000 worth of stock. As our trusted advisor, why didn't you talk to us about the necessity to protect ourselves under this Personal Property Securities Act? How would you respond to that? Very difficult question, I would have thought. So the best way is to say that you're going to implement systems, that you're going to encourage your clients to commission you to undertake a review. And if your client refuses, that you send them a letter indicating to them that you're not responsible if something goes wrong. We have a special form within our system, and there's quite a number of forms on personal property, but this is the main one, the form that really identifies where the personal property of the business was. So that's the index, and we'll just go into the form. So this form is asking you to work with your client to identify at a specific time, say last night, where was all of their assets other than real estate? And was it in their own premises or in leased premises or someone else's property, or was it on consignment? If it's in their own premises, there's no concern. But if it's in any of the other three, there is potential levels of concern. So this form then asks questions about whether they've got legal advice, whether they have got a terms of trade agreement, a retention of title agreement, and most particularly were these agreements prepared after January 2012, because that's when this legislation started. And then we move into livestock and crops. We've treated these separately so that it might jog your client's memory. Oh, yeah, we did have a certain amount of stock somewhere else. They might have forgotten otherwise. What about crops? There's some special clauses on crops in this legislation, so we've highlighted that separately. And then goods that you've left in someone else's possession. Mixed goods, where you're selling product that's mixed with other products. Goods that's used for growing crops, seed, fertilizers, pest control, and livestock feed have all got different treatments under this legislation. Then we move into artist works, painting, sculptures, etc. Plant and equipment, tradesmen's tools, cranes, tractors. And then with legislation like this, the government keeps on making changes. So there were some major changes made after the 20th of May 2017. We have a definition of a personal property security lease, which now doesn't start until after 2 years. When this legislation first came out, that figure was 90 days. So there's been some changes, 90 days to 1 year, now to 2 years. But because you may have agreements that relate prior to the 20th of May 2017, we have kept the old rules in our checklist in case that still applies to your particular client. And so the list goes on. There's a lot of items covered under the Personal Property Securities Register, as you can see from what I am flicking through on the screen. So that's the overview of what's included within the Personal Property Securities Register. It is complicated legislation. It resulted from the merging of over 70 acts of Parliament from the Australian, state and territory governments. It is complicated. Over $400 million has been lost by the owners of properties since this legislation started because they are not registered on the Personal Property Securities Register. The courts are very black and white on their interpretation of this legislation. If you haven't done something or your client hasn't done something, there is no leniency being given. Your clients need to be aware of this legislation, and we believe that you have a real role to play And it's also a new fee income for you in being very conscious of the requirements to offer to your clients a personal property securities register initial review if they've never had one or they're a new client, and then at least an ongoing annual review. If you've got any questions about how the personal property securities register operates, or if you want to participate in a mentoring session on the PPSR, please contact us because we do have mentoring sessions available. Have a great day. Goodbye.